I hope everybody is doing well. As the title of this video suggests, mark my word, this is the market top. So I came out Monday morning, just a few days ago, and I said this week will be a down week. Looking at the futures, it looks like it's starting to turn out to be a down week, and it looks like it's a shooting star candle, which is a bearish sign. And so you have all those bearish things right there. Also, what we're starting to see is that going out onto the daily, we're able to do a fib retracement. And by the way, if you guys are looking at this on the podcast, you guys might want to look at this on YouTube, see the visuals because this is a visual episode. So, looking at it, looking at the charts, we're starting to see, if you look at a fib retracement, a Fibonacci retracement up to 61.8 level, you see that there's a complete rejection. So you go from the very top to the very bottom, then you look at 61.8, and you see there is a rejection. And then if you actually look at the SP 500, not even the SP 500 futures, just the SP 500 itself, you start to notice that the fib retracement was actually rejected, and that on that day it did not close above that Fibonacci retracement. So that's the first thing right there. Also, the weekly equilibrium that we're looking for. Another thing in this market is that the 20% of the value in the S&P 500, which should consist of 500 equities, is all in on just 5 names. 20% of the S&P 500's value is in 5 names. So you have names like Amazon, Apple, Microsoft. If it were not for these few names, the market would not be going up. So things like Facebook, Netflix, Amazon, Apple, Microsoft, if it were not for these names, you would not see the market going up. And so the breadth is a very good indicator. The breadth is very simply, out of the 500 companies in the S&P 500, how many of them are going up, how many are going down. You have a situation where most of them are going down, but it's just a select few, and when I say select few, it's a number that you can count on one hand that are going up and pulling the rest of the market up. And 20% of the S&P 500's value is all in just 5 underlyings. So that's another thing right there, definitely watch out for, that just points to further bearishness. Another thing also, it's more longer term, but something to still keep in mind, and that is that when looking at the market, what we tend to see is that the largest companies decades ago, like U.S. Steel, are now nobodies in the space. Basically, nobody knows about U.S. Steel. Of course, you could, of course, it's ticker symbol X, but it used to be a lot larger company. If you're looking at this on YouTube, you're going to be able to see that I'm showing you the chart, and we can actually go out to a monthly chart where U.S. Steel, it topped out in August or April of '08, but ever since then, it has not seen its glory days once again. So you have other companies too. You have companies like Cisco. You have other internet companies that were brought up during the dot-com boom that have not seen those days once again. And this is a new thing that's going to start to happen with these other names. So as I said, with the market breadth, you have 20% of the S&P 500's value in just 5 underlyings. And if it were not for these 5 stocks, we would still be in a big, big downtrend. But it's these 5 names that are bringing the whole market up. And so that is a big warning sign right there, but it's also a sign that's going to tell us something else. All of the companies that were the largest companies in the world in 1980 are now not the largest companies in the world. All the companies that were the largest in the world in 2000, like GE and Cisco, or ExxonMobil, are not the largest in the world. The companies that were the largest in the world later on in 2007, 2008, many of them are bankrupt, and many of them are not around anymore. And the largest companies, as of now in 2020, are not going to be around anymore later on, or they're going to be far smaller than they are. So I think that the secular trend is headed to a point at which you will see things like Apple heading down. You'll see things like Microsoft doing worse than the rest of the market. Right now, they're doing better than the rest of the market. But as we know, the companies that are the largest companies in the world years ago are very likely to have a secular decline, and decades later be a lot smaller than they were. So as I said, Cisco is an example of that. You have Intel as an example of that. AMD, all these companies, very prominent companies, largest companies in the world. They're still well known, but they're not the largest in the world, and they're definitely not at the top of the list. Another thing, also, as I said, all of those things right there, I want to take a look at oil. So that's just a longer term thing to keep in mind, is that the companies that are the largest in the world in 2020 will not be the largest companies in the world in 2030. And the companies that were the largest in the world in 2007 are not the largest in the world right now. And that just is a business cycle thing that continues and is the life and death cycle of a company that eventually grows to the point where it has no more growth. It starts to plateau out. And that's what we're seeing right here in this one last phase up in names like Amazon. And I don't think that these companies have enough growth into them anymore, because the PE ratio on Amazon is all the way up to about 70. So you have a PE of 70 on Amazon, and that price is in major growth. Companies without very much growth should have a PE closer to 10. So clearly, these are overvalued. It's in a bubble, and we've been talking about that for quite a long time. But you're starting to have a situation where the breadth of the S&P is a majority in just 1% of the names, and I would be watching out for that right there. Another thing I want to take a look at is oil. So front month oil, CLM 2020. So a couple of things right here. Looking on the hourly, we're starting to see this head and shoulders start to form. And so we already had the left shoulder, the head is starting to form, and then the right shoulder will form later on. So going into this, why do I think it's going to be head and shoulders? Well, first off, it's already pointing to be head and shoulders. The big thing that brought the oil market up from its lows was that, first off, you had a short squeeze. The short squeeze was followed by EIA data that said that the amount of oil that was in storage in Cushing was actually less. They were expecting a close to $15 million build, but you had a far smaller build by millions and millions. And so immediately the market started to go up. Oil markets started to go up. Front month crude oil futures started to go up. But here's the thing, and we've been talking about this for a while, and that's why we're playing the tanker plays. And what's happening is that you're having a situation now where there is no more storage in Cushing. And Cushing, Oklahoma is where these futures are settled. It's where a majority of the oil gets stored. And there's no more storage in Cushing. And that's why this week you had a very small build. And the reason you had a very small build was because in Cushing, we're running out of storage. There is no more storage in Cushing. That's what I personally believe. I believe that there is no more storage in Cushing, Oklahoma, and that is why the tanker rates are going up. So the market right here is irrational. It is not understanding what's going on. So what's going on right here is that the market is going up on this news. It should be going down on this news. There is no more oil storage out there. And the reason there's no more oil storage, and we can see that with the EIA data, is that there was a very small build. The reason there was a very small build is not because the amount of oil is going down and the oil glut is going down. That's absolutely not the case. What's actually happening is that the amount of oil is rising, but there's no more place to store it. There is no area in Cushing, Oklahoma to store the oil. And so you're running across a situation where there is nowhere to store the oil in Cushing, Oklahoma. And so they're going onto these tanker ships, and that's why we're playing the oil tankers. And they're going onto these tanker ships, and the tanker rates are going up, while simultaneously you are having in Cushing, Oklahoma, you're having a smaller and smaller build. And I expect that at this point, the market did top out, started to go down. So the market topped out, started to go down about 9 o'clock on Thursday. So 9 p.m. Thursday was the top. I think that it will bottom next week. Next week, Wednesday, I think it will bottom, and the market will irrationally go up because it will mistake the news. It's going to think that when there is a negative build in Cushing, Oklahoma, that means that the oil supply glut is over. But really, there's a negative build in Cushing, Oklahoma because you can't add any more oil. If you have a glass of water that's already full, you can't add any more water to it. And so in that manner, what's going to happen in Cushing is that next Wednesday as the EIA data comes out at 10:30 in the morning, you're going to start to see a situation where the market is going to misinterpret that and it's going to start going up, even though what's really happening, and I think that the market will misinterpret this initially, but then it will later realize the misinterpretation. It's going to realize that it was being irrational later on, but it will initially be irrational, and the market will go on, and it's going to think that the negative build in Cushing means that the oil glut is over. But the negative build in Cushing is because if you have a glass full of water, all the way to the top, you cannot fill it with more water. That's what's happening in Cushing. It's all full. So you can't fill it up with more oil. And that's why the tanker rates are still going higher and higher and higher, yet oil in Cushing cannot be stored. And so that's what's happening right there in oil. Head and Shoulders is forming right there. And I also think Head and Shoulders is also forming on the S&P 500. Also, another thing, all the crypto traders, keep in mind, Bitcoin is starting to have positive correlation with the rest of the market. And so it's going to start to go down from here. So that's the first thing that I'm looking at right there on oil. And I want more clarity going later on, looking at the next EIA report. This week was a very small build compared to what was expected. But that is my speculation right there, that you're running out of storage in Cushing, or there is no more storage in Cushing, period. And we've been talking about this for weeks now. There is no more storage in Cushing. And because there is no more storage in Cushing, the build will next week be negative. The market will probably misinterpret that and go up. But later it will realize it was being irrational and start to go down again. But I expect that to happen in the WTI markets. Going into next week, I want next week's EIA report, though, just get some clarity on what's going on over there. But the oil tanker rates do seem to be going up. So looking at the trades, as I said, this is the market top. As I'm calling it, I will take credit and simultaneously take blame on this right here and say that this is the market top. I do believe that on Wednesday night, we did have the market top. Thursday, the market started to go down. Every time it tried to go up, it hit a resistance point, and that is the definition of a bear market rally or a bear market rally starting to top, when you start to hit a resistance point and it just shows no buyers at all. Usually at the resistance point, you tend to have breakouts. We've been seeing that basically every single day. But then Thursday, you try to have a breakout at the open. It's tried to go up. It went up, but then it came right back down. And that's what happened on Thursday. And then Thursday night, going into Friday morning, which is when I'm recording this, is Friday morning, 7:54 a.m. Eastern Time. The market is down even farther. So it just seemed like it was some consolidation before another leg down, and it did start the downtrend. And so with that said, SPY 230 long puts August expiration. It's a cheap way to play it. I do expect this thing to probably become, from the way that it looks, a 5-bagger. It doesn't seem to become a 10-bagger, but probably a 5-bagger. I would say that a 5-bagger is probably what I'm expecting going into the SP 500. And then on previous trades that we had Nordic American takers covered calls. Just keep on doing those. It's a longer term, 6 to 18 month thing. As I said, the market, of course, had a short squeeze. And this is why things like Nordic American tankers and what's going on in the oil markets, the reason I like it but I don't like it is because companies like Nordic American tankers, what's going on in the oil markets is a busy trade. What do I mean by that? Well, right here we're looking at a chart of Nordic American tankers. And you see that there's essentially a blow-off top. The reason you're starting to see this blow-off top is because you have a situation where all the sellers and the shorters are on the sidelines. They're waiting to get in, but all the buyers, even though the buyers are fundamentally right, I do believe that the buyers are fundamentally right. All the buyers are already all in, and all the coverers are already all in, but all the sellers and all the shorters are sitting on the sidelines, waiting for the right time to get in when you run out of buyers. And so you have a situation where everybody has bought in, but everybody who is thinking of selling is still on the sidelines. And you have very aggressive buyers, but you don't have very many aggressive shorters. And that's what tends to happen. You will always have 50% sellers, 50% buyers. But all the buyers who wanted to buy in, who were sitting on the sidelines, already bought in. All the sellers and shorters who had not yet sold or who had not yet gone short, who were thinking of doing so, were still on the sidelines, and they started to enter at that point when they saw the right entry to do so. So that's what's starting to happen, and it's happening in Nordic American tankers, and this is what causes blow-off tops when you have very aggressive buyers but very dovish shorters. You tend to have this sort of a blow-off top. You see this in other areas too. We can look at other equities. We can look at Tesla and what happened over there. You had multiple blow-off top type instances. Lumber Liquidators is another one. Essentially had a blow-off top. We can look at SPCE, blow-off top. But this is what we mean by busy trade. You have very aggressive buyers, but not very aggressive shorters. Dovish shorters, bullish, aggressive buyers. And even though they are fundamentally right, it creates a situation where you have a very busy trade that is one direction, is a one-directional market with a very busy trade instead of the normal two-directional market, and this can lead to blow-off tops because things are so aggressive in a certain direction. It doesn't necessarily mean that the fundamentals are bad. I still believe the fundamentals for Nordic American tankers are great. We're just having a situation where you have very aggressive buyers, and in oil, we're starting to see the complete opposite, and it causes these big short squeezes because you have a very busy trade where everybody is starting to short oil, and you're having a situation where when there is a short squeeze, it's an extreme short squeeze. So you have a situation where you can never have more buyers or more sellers. The equilibrium of supply and demand makes it so that half the people are sellers, half are buyers. But you have a situation now where you have very aggressive shorters in oil, but not as aggressive buyers in oil, I would say. And so this creating a situation where once the short squeeze does happen, it's a very big short squeeze, then you have fundamental data like the EIA data. That's a binary event. It comes out very positive, and it then pushes some longs in there. And then the technicians who start to see that there's an uptrend start to get into oil. Based off their trend following systems, based off their CTA type systems, they start to get into oil. So you have all those things just colliding all at once. But I would warn people of that right there, is that it's a busy trade. Everybody else is doing this, and also Nordic American tankers is what we would consider a cult stock. It's a cult stock because if I just go online on a stock twist or on Yahoo Finance, I see that everybody's talking about Nordic American tankers. It's the number one thing that everybody's talking about. And their forums are filled, and it's something where even traders have no idea what they're doing. These are the Robinhood traders that buy Tesla at 900. These are the guys that buy USO when it just dropped a few percentage points and went a lot lower. These are the same people who just bought Nordic American tankers. Doesn't mean that it's going to go down, but it just means that this is the dumb money. The dumb money is starting to move in, and they aren't exactly conscious of what's going to happen. And so it's a very busy trade. You have lots of retail traders moving in, and Nordic American tankers is a trader stock. We saw it when Nordic American tankers topped out at that blow-off top. We saw that the volume on Nordic American tankers was so high that the retail traders traded probably 99% of their shares. Almost, I would say, over 90% of shares were traded. On that very day, over 90% of Nordic American tanker shares were traded. And so it was almost all day traders or short-term swing traders, and people were taking profits. But then what you had on top of that was that the other 10% might have just been the CEO, CFO, other C-suite employees, big investors, things like that. So really, you didn't have a situation where everybody was buying and holding their shares. You had basically 99%, the volume was so high that basically out of all the retail traders, 99% of them were trading it. So it was probably day traders, it was probably the dumb money, people in Robinhood just going and spending some of their money on North American tankers because they feel it's going to go higher, but they don't actually understand the trade. They're just going into these trades because of FOMO, because they feel that others are saying that's a good trade, but these are the dumb money, and even though they're going to be right eventually, I do think that fundamentally Nordic American tankers is great. You're running across a situation where the long positions in Nordic American tankers are so filled, it's such a busy trade, you have so many people that you are prone to those sorts of corrections, so just watch out for that. Euronav, I would say not so much with Euronav. Euronav is not as talked about, and so with Euronav, it's not a cult stock. It's not as talked about as Nordic American tankers is, but that is one to be watching out for the long calls. Just roll these up and over in expiration. Same advice I gave you before. And if Nordic American tankers goes down further, buy back the calls, roll them down, and out in expiration if you do want to do that. Apple and Microsoft pairs trade. So I come out Monday morning, I said I want to do Apple and Microsoft pairs trade. So the way that I want to do it was that I wanted to do a vertical call spread on Apple, and then I wanted to go on to Microsoft and do a call horizontal spread. Right now, the Microsoft trade is just at about break even, while the Apple trade is up probably around almost 40%. So it's up almost 40%, and I said that it would probably be making around 37%, I believe, Monday morning, but then Apple gapped up open. So you actually would have gotten filled on that trade a bit closer to the money. And because you would have gotten filled a bit closer to the money, you would have made somewhere around 40%. I would get out of those trades now, take your profits in Apple and Microsoft. Microsoft, and those are pairs traded together. And then the Microsoft part, it was just a break even. The Apple part, you're up almost 40% on those. And so just take the profits right there. TNP, long calls. Strike and expiration, long June 19th, 5 calls. Just keep on holding on to those. Those are down a bit. And then we have the Zoom and Facebook pairs trade. We were going long Facebook, short Zoom. That's worked out very well over the past week. Facebook is up probably 11-12%. Zoom is down over 30%. If you want to, you can add a stop loss on that trade and just lock in some profits if you want to add a stop loss. So if it does start going against you, you do lock in profits. But I would continue that trade right there. I think Zoom is very overvalued. Even though Facebook is also overvalued, it's not nearly as overvalued as Zoom is. So that's all I have for you today. Just keep in mind, though, what's going on in the oil markets. That's pushing the market in different directions, but that is an important area to be looking at. It is a busy trade on the short side in the oil markets, but the market is misinterpreting what is going on in Cushing. It is seeing a smaller build and is thinking that the oil glut is over. In fact, a smaller build just means that there's no more area to store the oil in Cushing. We have run out of storage in Cushing, and next Wednesday, I'm telling you right now, next Wednesday, 10:30, go and check what's going on in the oil markets, but I believe that the market will be irrational and that will go up because it believes that when it sees the news that there is a negative build, it's going to go up. But in fact, the negative build is just a sign showing that what's going on in oil is that we have a situation now where there is no more storage in Cushing because, as I said, after a glass is completely full of water, you cannot add more water to it. It is full of water. So you cannot build more water into it in the same way. You cannot have a build of oil in Cushing since all of the storage tanks are full. So watch out for that. Next Wednesday, 10:30, EIA data comes out on oil, and I do think the market will act irrationally and actually go up when it should be going down, and actually realizing what is happening. As for the rest of the market, head and shoulders on both oil and the S&P 500. Bitcoin is correlating with the S&P 500. I am calling it right now. I'm calling it that this is the market top, and the S&P 500 will head lower from here because 61.8 fib retracement did not work, and I told you guys a couple of weeks back when it gets to 61.8 fib retracement, start getting short over there. This is the time. It got to that 61.8 fib retracement. Tried to get over and close above it. It could not close above it. Tried to do that Wednesday afternoon. It could not close above that. And it started to go down since then. And the breadth of the market is also looking very bad, and it's starting to become a downtrend. So we're taking a look at all that. If you have any other questions, go ahead and ask me inside the comment section. Other than that, I will keep you updated with other trades and have some videos on USO and such coming out. So stay tuned for those. Other than that, if you have any questions, if you're watching on the podcast or you're listening on the podcast, you can contact me on The Real Alpha Action. And I actually think Anchor, the Anchor podcast app, actually has a way that you can contact the creators themselves. And if you are watching on the YouTube channel, just go ahead inside the comment section and ask me any questions you may have. Other than that, happy trading, everybody.